Good morning and happy Easter weekend to everyone. It is currently Friday morning and just wanted to do the weekend update. It is Good Friday. Our markets are closed. So let's take a look first of all at the chart of the SPX. So we can see that SPX is continuing to make lower highs, but it's also making higher lows. So it is strengthening a bit here. It's held up fairly good this weekend. So it had, basically an entire week and a half of up. Then it drifted back a little bit and opened at the same low here on Thursday and then rallied to break out above that former high. So it's shown some strength. And I will also say that usually a wedge pattern like this, so that this would be our wedge essentially, this line here on the lower end, this line, either one of these on the upper end. So we originally had this line. We did break above that with some force, and that would be the breakout of this wedge. Now we've kind of formed a little bit of a new wedge, but wedges do more often than not tend to break to the upside. We can see we had a lot of up volume here. So when we had these up days, we had huge up volume. Then we had a big day here, which I think was another banking scare day, if I remember correctly. But overall, we can see that our up volume is slightly outdoing our sell-off volume. So that's a little bit also of a bullish indicator as well. So overall, I would expect at this point to probably be in this, 4,100 range, maybe a little bump out to 4,150, down to about 4,000. I don't know that we're going to come back to, the bottom of this trend line. I just don't see that or feel that in the markets right at this point. So probably, more 3950 to 4150, somewhere in that general range. So volatility has also dropped off significantly. We're below 19 in the VIX, and that also is a bullish sign, but that also makes our entries a little bit more expensive on some of the trades that we do. And so we're light right now. I probably have about 35% of my account in trades right now, maybe 40%. So I'm staying to the lighter side while we have lower volatility here. That's something we'll actually end up discussing in our last butterfly class. So let's take a look at our dashboard here. So, I've closed out a couple of our trades. We've got, and this isn't just class, by the way, this is personal trades as well. But let me go to just class trades here. Before we do that, though, let's just pull our report. Excuse me. And we take a look at the report, and let me narrow this to just class trades since 12/1. These are only our closed trades. And these are our class closed trades, so we're approaching on the $10,000 mark. We closed out a couple of trades this week. We closed out the RUT double calendar for kind of a disappointing, in my mind, small profit, but it was just acting funny, and as volatility was increasing going into Thursday, which does tend to happen, particularly as you go into a holiday weekend, and we had a major announcement occurring today with the jobs report. I haven't actually looked in on that to see how that, if that's had any impact. We won't necessarily see it in the market since they're not open today, but we should have the talking heads, if you will, the pundits kind of telling us where we're at on that. And then we closed out, we did a stars earnings calendar or diagonal. That was a nice trade that we closed out within a day there, up about almost 30% in one day. So those are the trades that we've closed out for the class. We can see that kind of trend here. And this is the overall equity curve of the class trades. So things continue to move along quite well. Let's take a look now at our open trades. Okay, there we go. Sorry about that. I had the wrong filter up. So we can just walk through these various trades. So this particular class trade, so this is one we're probably going to want to be closing here maybe this next week. It would be nice if we got a little more pullback in this. We do have an order floating out there. We got 14 days to expiration. The software was just updated to include the DTE here, which is nice. And I see it also includes the symbol in the upper left-hand corner. So those are a couple nice additions. And anyhow, a little bit of a pullback, and I think we should be able to thin out one of our butterflies, raising the right wing as we do. This one, our double calendar, this one expires this next Friday. Under normal circumstances, I would have expected to see a little bit of profitability creeping into this. However, what often happens going into the weekend, and then also particularly with I guess you'd call it an economic announcement of the jobs report today, a lot of people buy protective puts going into the long weekend. Well, when those people are buying those protective puts and driving the price of them up, of course, our calendar here, the short period, the shortest of our strikes are in fact short puts. So when the price of those get driven up, that puts a little bit of a depression on our P&L, even though we might be right where we want under the tent. So what we're looking for on Monday, if the jobs report doesn't have any huge market impact here, I would expect on Monday very quickly this line to kind of creep up into here and start showing some profit in this trade. We do also have an order laying out there to thin one of these as well. And again, if we don't have a big market move one way or the other, or particularly down on Monday, I would expect that one of those might pop off at some point during the day on Monday. This one also could have potentially been adjusted. This is a flat fly. We don't have an order out there on this right now, but I was contemplating an order that might raise the right wing. I chose not to do that going into the long weekend, because if this announcement does in fact provide some sort of a sell-off, I'd rather be in a flat fly configuration here. That will help balance the positive delta we have here. So here we've got 9 in positive delta. Here we're slightly negative delta. Here we're slightly negative delta. Here we're very slightly, we're slightly positive delta here. So basically, I kind of wanted to leave this one intact to maybe balance off the others. So that was kind of the thought process behind not making an adjustment on this one. And then, of course, our FedEx earnings calendar, we continue to battle this one. I'm fine with where it is. As I mentioned, when I made this adjustment and I rolled up my short strikes into the same expiration that our long strikes are, I didn't need to. I could have rolled another a week away and then gotten yet another roll out of it. I just didn't want to have to manage all that, so I just took one big roll. I also said I'm okay getting assigned 200 shares of FedEx, so that had to also factor into my decision process. Otherwise, I probably would not have rolled quite so tight. But at the end of the day, as this starts to expire or decay more throughout this week, I would expect the P&L here to kind of creep up. I don't know that it will go positive this next week. But as soon as it starts to get a little bit into positive territory, I'll go ahead and at least thin one of these out. And then I may also roll up a long wing there when I can do that really, really inexpensively. But at the end of the day, I'm okay taking a couple hundred shares of FedEx if it gets assigned to me. And if it does, then I'll probably just sell covered calls against it and continue to work through this. So that is important to understand, that in our earnings trades, sometimes we have to battle these things for a while. I would say that about 70% of our earnings trades we can get out of fairly quickly within a day or two, have a pretty nice profit. 30% of them will go sideways on us, and we can battle those. Of that 30%, I would say probably about 70% we can usually work back into what I'll call a scratch, which is a break-even trade or even a little bit of profit. And then that last remaining portion, so probably about 30% of those 30% we go to battle on, we may never get back to profitability, at least in a reasonable time frame. And at some point, you just kind of pull the plug and say, yeah, that one didn't work out. So overall, the vast majority of earnings trades, specifically in the way that I'm doing them, using calendars, using diagonals, I have had good success with those overall. And when I do have to battle them, I like the fact that I've got the ability, a lot of room to battle them if I put them on correctly. So anyhow, I think that is it on our weekend update for this weekend. And again, we are a little bit light by design, and we're going to be thinning more this week. This will probably hopefully get thinned out a little bit. This one we may adjust or possibly thin. This one's certainly going to get thinned a little bit. And this one might hit a little bit of a target and get thinned as well. So, I'll be looking for, if we can get a little bit of a bump in volatility, a little bit of a sell-off, I'd like to get another broken wing butterfly on. I'm a little leery of another flat fly right now because in lower volatility, and if we get a breakout from a wedge, those breakouts move fast, and that puts some challenge or some stress on a flat fly. So again, we'll be taking a closer look as we go through the week. Sunday session this week in the Deep Dive Butterfly class, for those of you that are in that, we're going to be talking about the adjustments, specifically upside adjustments. And so you'll kind of get to see how we might treat some of these as we go through that class on Sunday. So that's it for now. Thank you very much, and we'll see you in the groups.